as a segue into our next topic, obviously talking about, luxury homes and staging and our endorsement deal with Barbara Corcoran, which we're so excited about. When we talk on the show, our company really serves all clients, all price ranges. I heard David Graham talk about it earlier on his show, how some financial companies will say, oh, you need a minimum of X dollars to work with us, and they're a company that serves everybody. We're the same way. We sell entry-level condos, and we sell multi-million-dollar luxury properties. Obviously, it's a different agent, different segment markets, different areas of the Tampa Bay area. But we service everybody, and one of the articles that kind of stood out to me, first-time home buyers have been a big piece of our business as we've grown. But there was an article this week from the AP about 7 reasons renters don't become homeowners. And George with FBC is with us, and I wanted to talk to you about this because I noticed the top reasons, and I think the top reasons are naturally reasons why we think a lot of first-time home buyers don't buy. But most of them are myths or misconceptions. They're misunderstandings. The first one is not enough money saved or too much debt. Now, the too much debt you might have an issue with that you can't fix, but there's a misconception about how much money you need to buy a home. I think a lot of first-time buyers or renters just need to be educated about the different loan products and how little down you can have if you're solid everywhere else.
Absolutely. I mean, you have an FHA product where you can come in with 3.5% down. That also allows a maximum seller concession of 6%, so you can use that to offset closing costs. So you're buying a first-time home buyer, $100,000 house, you're going to need $3,500 to get in.
And that money can come from someone else. It can be gifted. It can come from family. It can come from a 401k. It can come from a lot of different places.
Sure.
And $3,500, I mean, in reality, if you're coming up with first, last, and security, it's really not far off from what you'd have to come up with in that environment.
Exactly.
And your monthly costs drastically lower, as well as your write-off. So again, a misconception. Another one, they don't make enough money. Now again, you got to have enough income to qualify. But I think again, consumers, they don't know how low interest rates are, so they think they have to make a lot more than they have to make to qualify for a mortgage. With interest rates as low as they are, the money that they have to have available for payment isn't as much as many of them think.
No, it's not. And one thing you can do also for FHA and conventional, you can have a non-occupant co-borrower, where you can have a relative be a co-signer on the mortgage, use his income or her income to offset your high debt-to-income ratios and qualify.
Credit isn't good enough is another one. That one I think again is somewhat explainable because obviously again people may pay attention to or know their scores. But even on the same token there, depending on the loan product, you can get creative. You can go lower than most people expect on credit scores. With a VA loan, for example, I know that you can sometimes get even really low credit scores through.
Yeah, and on FHA as well, we also just reduced our credit scores to 580.
Wow. Yeah. So and it's funny. We talked about this a couple weeks ago, and Aaron, after we come back from the break, I want to talk to you about this kind of because you've seen the market go from really high to really low, back to really well, and I feel like some of the loan products. I know this isn't you, George. This isn't your call. This is somebody Wall Street, in New York or some higher up. I feel like a lot of the loan products that so many people attempted to scapegoat and blame with the fall through, which it really wasn't the loan products. It was the consumer that. There was a whole variety of things.
Buyers of the product.
So, but nonetheless, some of those products are starting to come back, and I think there's good with it, but we got to be cautious, as well.
Yeah.
So a couple other points about it. They don't want the upkeep that comes with home ownership. Again, I think you can buy a home warranty. You can buy a newer home. I mean, there's a lot of, if you're concerned about the upkeep, there's ways around that. Don't want to be tied down to a certain area, so they like to be mobile. They like to be able to get up and move, and so that part of it is somewhat understandable and not something that's easily explainable by the math. If you get somebody that wants to move every 6 months to a year, owning a home may not make a lot of sense. Renting is more affordable than buying. Complete myth. Complete myth. Complete myth, right? When you factor in all the benefits of ownership, the taxes and all that, it's not true. And they don't want to tie up their money in the house, so they'd rather tie it up somewhere that historically has a lot more fluctuation, has a lot more risk. It doesn't make sense. What do you want to tie your money up in if not a house?
What other vehicle is better than what we're getting in real estate now?
Right. Especially with the appreciation opportunities, right? The tax benefits. where else are you going to get that kind of shelter? So again, I think it's no secret that most super wealthy people own their own home and own a lot of real estate, and there's a reason for it, you know. And
I think real estate's interesting too, because you have the ability to improve the property, improve it via sweat equity.
And you don't have that. You know, if you own a stock, you're not going to fly out to
There's
Google.
nothing you can do.
You're not going to fly out to Google and help their building look better and make more money. I mean, you're just not going to. But you're right. You can improve your own value. You know, there's a lot of things with real estate that you can do, and of course, you gain in the appreciation. You know, directly. There's just so many benefits.